Welcome to the How to Raise Money podcast for anyone who wants to raise other people's money for a business or property venture. Right now, there has never been more money on the planet, and there has never been more opportunity. This podcast will help you put the two together. So, if you need money for your business or property proposals from banks, lenders, angels, whales or dragons, this is the podcast for you.
Hi, everyone, and welcome to another edition of the How to Raise Money podcast with me, Ray McLennan.
And me, completely thrown off track with a slightly different opening, Nigel T. Best. Ray, you got me. You got me with that.
Hey, Nigel, you've got to shake it up every now and again.
Exactly. And for those of you looking at us on YouTube or the Facebook page, Facebook group, you'll see I'm sporting a rather natty sweater right here. Hey, what do you think?
Natty. It looks like something my granny knitted 50 years ago.
Thank you very much for that.
Very well, though. Very, very decorative and very Scandinavian.
Yeah. Well, tell me, how are your requests to give fashion advice, Ray, these days? You inundated?
I'm not on call. No. Good Morning Britain have not been on the phone.
No. It is a bit parky here in the UK at the moment. I was looking at
parky means cold.
Oh yeah. Sorry. I was looking at our stats, and I think we're about half of our listeners. Hello, everyone over in the good old US of A. Now, America, I'm always fascinated because everyone always takes the mickey out of Americans, saying they don't have passports. The vast majority don't have passports. But America is a place where you can experience every type of weather and scenario, and scenery. Yeah. And you actually don't need to leave, to be brutally honest. So why would you have a passport? But I don't know. There may be some listeners who are thinking 2 degrees. What's that? About 34 degrees Fahrenheit at the moment, 35 Fahrenheit. That you're probably thinking that is tropical at the moment. And for others, you're probably thinking that's why they live in the north of the country and we stay down here. But no, it's all good. Ray, how are you?
Fine. I didn't realize we'd morphed into the Weather Channel, but let's get on.
That's why I'm wearing the sweater. I'm obviously pitching for a new job.
Good luck with that.
Thanks.
You do weather, I'll do fashion advice. We'll see how far we go.
Yeah, well, what we're doing now, Richard Madeley's not on Good Morning Britain, using the full force and teeth of his interview technique, to rip the politicians to shreds and find out what's really happening in the economy.
Indeed.
Instead, he's gone into a castle.
But what's happening in the world of banking? What's happening in the world of banking?
Well, the banking, here's the thing. Now, the reason I've started off on quite an obtuse, bizarre, some would say going down a rabbit hole, Alice in Wonderland fairy tale scenario is because, Ray, I've had recently conversation with people from a bank. Yes.
No way. An actual bank.
Yes, an actual
Hang on,
bank.
I've got to ask you, did you go into the bank?
No.
You didn't manage to find one of those branches then?
No. The High Street Bank appearing soon on the occasional high street somewhere not near you. No, I was at a meeting and they attended the meeting because they had some interesting concepts to kind of remind us why they are the place to go if you're wanting to raise money. And so we were all ears. It was a small select group. There was only about 10 or 12 of us. And it was, let's just say, if you're wondering which bank it was, well, the horse was tied up outside the room. The room wasn't big enough to fit it in. And they were trying to sell those rides for £1 a go. But no, the horse aside, it was interesting, Ray. They realize that here's the crucial thing. They are acutely aware of the rise of the challenger bank and the simplicity with which people have found opening an account and doing transactions and buying crypto, buying overseas stocks, all from your phone, all from an account, creating a new account. I mean, I've done it where sometimes you're wanting to purchase something in dollars, or it's always sold in dollars, isn't it? Whatever it might be.
Yep.
and you can create a dollar account. And sometimes the internal transfer rate on these challenger banks is remarkably better than the no commission but enormous spread that you will find in the high street bank when it comes to, you know, foreign exchange and stuff. So yeah, the simplicity is there, the ease is there. I've even seen, have you seen, Ray, the adverts for the challenger banks? Open your account. Certainly Revolut I've seen out there on mainstream TV adverts. So that they are kind of worried. Well, are they worried? I'm sure they are. I'm sure they're concerned that what they thought might have been a small sort of dent in their market is probably becoming bigger and bigger and bigger. And so they're coming back, and they came back to tell us about how they're going to use a unique selling proposition, unique selling point, and bring that to the people, so that we will literally fall over ourselves trying to get onto the back of that horse for a ride, and being taken for a ride. Is that the right phrase? No, maybe not.
Well, that is an expression. Just for those that are probably wondering what challenger banks are and who they are. In the UK, there's high street banks. In America, there'll be high street banks as well. Obviously, you'll have the names that you know that are on Main Street. And in the UK, we have Barclays and Lloyds, and is it now the Midland Bank as well, and NatWest, and
the Midland.
Is the Midland Bank not been brought back again?
No way. Right. I'm gonna
also, Clydesdale and the Royal Bank of Scotland.
Yeah, hold on. If the Midland Bank is coming back, I have got somewhere a Griffin Savers small sports holdall containing a Griffin Saver small protractor and ruler set. I think it came with. Quite why they thought I needed a ruler to underline things or do things, I don't know. But somewhere I think I've got a Griffin Saver. So
is this when you opened it with 3 shillings and 6pence, or was it later than that?
Well, yeah, it wasn't quite that, but yeah. Half for sixpence, governor. No, it was when I was a kid, and they had I can't think what Barclays was, but they gave kids, you know, if you opened it with kind of £2, you got a bag of goodies.
Oh yeah.
So I did that, and it was a Griffin Saver, I think, was the Midland.
Well, that was the Main Street banks. I don't think you're going to get a Griffin or a bag or anything from the challenger banks. They don't seem to be giving stuff away. But the challenger banks would be Tide, Starling, Revolut, Metro, that sort of thing, where they tend. Well, Metro do have branches, but they tend to be online only, and you can open an account really, really quickly. You just need to download some documents and do a little video and that sort of thing, and your account and sort code and number and card arrives the next day. It's fantastic.
Yeah, I'll tell you what, Ray, I'll put a link to my Revolut, because there's a nice little thank you for me if anyone uses that link to get in and open an account. It's very simple to do. I'll put that in the bottom. Have you got one for a different one, Ray? We'll stick yours in the show notes as well.
I don't know. I'll have to check. I've got two. I've got a Starling account, Tide account. But yeah, you're right. I've got Starling, which also has a euro account attached to it, a dollar one attached to it, and then when I wanted to open a joint account, it was done in nanoseconds. It said, "Who do you want to open a joint account with?" And I named them, and they said they already have an account with us. They then got a message saying, "Do you want to open a joint account?" They said yes, and then boom, that was it. And the cards arrived the next day. It was all utterly seamless and rather brilliant.
And here's one of the things I thought. Right, I'm gonna Ray. I said to myself, right, this is easy. I'm gonna make a move into American stocks. I don't want to cause too big a ripple. I don't want to cause too many waves. But I'm gonna do a bit of investing. So I splashed out and bought 0.04 of a share in Amazon.
All right.
And yes, I'm mixing it now. I've got a heady 3.14% return. But I'm looking at my phone here, Ray. Not only can you buy the stocks and the crypto really easily, but it tracks it really easily as well. And we all know those high street banks, the tech was always lagging a bit because they had legacy systems. There were mergers between the big banks historically, and they always struggled to do it. Think back a couple of years to when TSB were taken over by, gosh, I can't think who, but TSB merged and they tried to put the systems together.
It was Lloyd's,
was it Lloyd's?
Yeah.
And they tried to put the systems together, and we all know it's very hard to get systems to talk to each other. And that looked, I think, everyone out for a few days, didn't it? So,
oh, that's right. Yeah.
you know, so these challenger banks, starting from a blank piece of paper, they came in and they looked at the tech and just stole a march. So the purpose of this meeting was, you know, the bank to come in to say, look, we get it, and we're not even going to try and compete directly against them because they've got the head start on us. What we're going to do instead is go back to the fundamentals of the bank, and that is building a relationship with a person. And so they're going back. It's like the wheel has turned, and they're wanting to have key relationship people in the bank who will come out and see your business, see what you're doing, find out what you're up to, and be able to judge and get to know you and see what you're looking for, because they're saying, look, this is what we're doing, because the challenger banks are not in a position to do that. They don't have bank managers as such in the quantity or distribution that the main banks do. And they're coming out to do this, to reinvigorate this market, build those relationships, and try and get, you know, the difference in the banking scenario to be that relationship. The idea being that you're then able to pick up the phone, go in and see someone, however that communication starts off, and say, look, I'm here, you know me, you know the business, here's where we're at, this is what we're doing. We'd like to expand, we'd like to consolidate, restructure, we want to borrow a bit for working capital, we'd like to do some of these things. And because of that relationship, those wheels that turn much quicker, they're well greased, they're well oiled, and it's all a much smoother journey. So I don't know, folks. Ray, what are you thinking? Going back to trying to build business relationships with people. What do you think? I don't know what the listeners think. We'd love to hear.
I mean, people drifted away from high street banks because they were closing branches and their service was poor and their tech was poor. I mean, if you look at Starling, they've only been opened a few years and they've got 2.5 million accounts. Monzo, which is slightly older, I've got 4 million accounts, and the others, you know, between them. So it probably totals about 14 million. Now that's 14 million accounts. Now, I dare say a lot of those people will still have accounts with the other banks. I certainly do, and I'm sure you do, and anyone I've ever spoken to is not exclusively with a challenger bank, because you've got, you know, from my own experience, you've got that, well, I'll try it out, see if it's any good, I'll keep my own account, and then I'll gradually move everything across. And that's exactly what's happening. You know, I've had Starling for a couple of years, I use it, not as the main account with everything going out, but I'm gradually morphing everything over now. And I think what the challenger banks have done is they've seen that happening and they've seen it speeding up, and it will feed through to the bottom line. It's bound to. And it's fed through the bottom line, and a few of the high hegians in the bank have gone, hang on a minute, we need to do something about this. Let's go back to our core principles. And these high hegians will all be older and will have remembered what it was like when they went back to a bank. They've probably consulted some kind of, some kind of group of people who, you know, make these decisions and decide what they think is good for the bank. And they've probably had feedback, customer feedback. They'll have forums and all this sort of carry on. And then they've realized they've got to do something. They have to do something. Otherwise, their lunch is being nicked. 10 years ago, 11 years ago, I was at a lunch, and I was sat virtually right next to the head of RBS at the time, because I was with Angel's Den and we were at a thing called Entrepreneurial Spark, which was sponsored by the Royal Bank of Scotland. And we were there. And the guy at the time said to the head of Angel's Den, Bill Morrow at the time, he said, we need to buy a share in your company because you're stealing our lunch. And what we were doing was we were working with high net worth individuals, sophisticated investors, to find investment for small businesses. So that was then. That was before all these challenger banks came along. So that was then when one of the banks could see that a large part of their business was being stolen by someone else. And I dare say all of that is feeding through. So they're in a bit of a panic. So they've got to do something. Now, your experience, which we'll talk about now, is quite interesting, because at least they've kind of got out of their bunker. They've reached out. It's only taken them since 2008 or 9 to step out of that bunker. But, hats off to them. They've stepped out. What was the response like, Nigel?
Well, yeah, it was, shall we say, interesting. I mean, just before that, Ray, picking up on what you said, I know a number of people come to us and this is what we're going to be helping people with, because essentially what the bank is saying is, look, build a relationship with us, and then when you want investment, you want to raise money, come to us, and it will be a much smoother process. And I know a lot of people have come to us and said, look, I want to build my own investor network where they get to know me, where I can go back out to them. I've built that relationship, and then people, in my little network of investors will be much swifter at wanting to lend me money for 6 months, a year, 2 years, whatever it might be. And this is kind of what we're wanting to share with people listening to the podcast, and the ability to build that investor network. The banks are coming in and trying to do it. So as we're around the table, and this was not this was not meant to be a let's put two people from the bank at the front of the room, hand out the rotten tomatoes, and on the count of 3 launch. It wasn't meant to be that sort of thing, but it was. There were a number of people who, some of them sort of just put their head down and muttered sort of incomprehensible things, but you kind of got the feeling it was rubbish, don't believe you. And the way you've treated me has been appalling. However, a few people did speak up and say, look, I get that. However, I've got the email, the personal mobile, and the office mobile of this person, and they haven't responded to about 25 requests for a conversation or a meeting. And obviously, hands thrown up in horror, and that shouldn't happen, et cetera, et cetera. And they say, no, we get this. We get that this is what you're wanting to do, but the actual the boots on the ground, and whether that's actually delivering what your mantra now is, was there was quite a gap still. So the communication was still quite a gap, and people were, the feedback was, yes, that would be good if you can actually get through to them, but you can't. The other thing was, we give excessive amounts of info, and then after a ridiculous delay in assessing that info, you come back and ask for more info. Why didn't you ask for it in the first place? Or they try and change it, or something else happens and they've moved, and it's, if you go to the doctors with some ailment and they pass you on to another one, you have to explain the entire scenario again. And there were frustrations. However, there was quite a good reaction in terms of, well, that would, if this actually works, that could be quite nice, actually, to pick up the phone to someone who kind of knows you and is willing to perhaps advance short-term, an amount for working capital, something like that. What they were doing was they were also saying that, look, we're going to tie this into a change in some of the things we do. So a bit more flexible lending. So we've spoken about this quite a long time ago, Ray, where we were talking about invoice lending and factoring and those sort of things. So they are looking to do that on a business to business basis. So it wouldn't be business to consumer basis, because typically that's much a quicker process. But if you're struggling with debtor days and things like that, and it's stretching too long and people are taking too long to pay you, they are looking at being able to look at your invoicing book and and your factoring of other items in there, so that it can speed up delivery of money. And it would appear that the rates would be only on what you actually do. So fixed percentage on, say, invoicing of 10,000 a month, it would be a fixed percentage for that particular month. So quite flexible. So they're looking at being a little bit more flexible. But Ray, I'm minded of a couple of people who were relatively senior bank managers who gave it up and have gone out on their own in terms of finance, because they got so frustrated with the banks. They both spoke of how in years gone by, they would have the authority to make lending decisions themselves. And both of them were kind of circa $1 million, $500,000 to $1 million. And then as time went on, and they were there at the bank even longer, those amounts got reduced and reduced and reduced, to the point where one who said, 10 years ago, I could lend you $1 million, and my bad debts were minuscule. I am now restricted to 140,000 that I can grant, and my bad debts on that are worse than when I had the ability to lend $1 million. And they said all the power of being able to go out, assess a business, see how it worked, actually go and meet the people, get to know them, gave them a much better understanding than potentially sending it off to a cold, darkened room with credit control and the underwriters and the actuaries all huddled in there, thrashing each other across the back with birch and all the rest of it, finding reasons why they couldn't lend. And they were saying in the old days, it was much better. We understood the business, we saw what they were doing, we knew who their customers were, and we could make a lending decision quite quickly. That disappeared, that dwindled, that ability. And this was one of the biggest frustrations that we've found, Ray, is the number of people who say, we go to the bank, they advertise, they'll lend you up to $1 million. And then when the only person you can find to talk to has a cap on their lending of 50,000, at which point the relationship is totally gone, because now it's gone off to some head office somewhere for that decision. They don't know anything about you. They keep asking benign, banal questions. It doesn't help. And then you get a decision 6 months later saying no, and it's cost you a fortune in that meantime. Maybe this wheel has turned and we're going back to giving the person who you meet the ability to lend up to a much higher amount, and let them be good at their job in terms of assessing the risk of you and your business. So I don't know, Ray, maybe this is the start of the high street bank easing things up a little bit and getting, back to better lending days of the past.
Yeah, maybe. Okay. Well, I think if there's anyone listening to this and you're having, I suppose, a good time with the high street bank, let us know. Equally, if you've had a bad time with the high street bank, let us know. hello@htrmoney.co.uk. But next week, I'm going to be at an event and there will be apparently over 100 people there. I'm going to ask the question. I'm going to ask how many people still have high street bank accounts, how many people have challenger bank accounts. I'm going to ask a few questions and just get a bit of feedback on that so we can feed it through. Because certainly my experience from the people I speak to is it used to be the first thought, high street bank. Now it's not at all. It's the assumption is made that the high street bank cannot help you or are unwilling to help you, or that it takes far too long. It's as simple as that. So developers and other businesses that come to us looking for funding, it's usually when you say, have you tried your bank? They're like, oh, I never even thought of it. So I think they've got a hill to climb, these banks.
Ray, if you're at this event, so the first question is who's got the accounts? And then your second question would be, okay, who of those, the challenger or the high street, which would you go to first if you wanted to raise money? There's your follow-up question. And then the third question would be, if you had the ability to nurture and grow a small group of investors who get to know you, and you can create those investors, so you've got investment availability on tap. Would you be more interested in doing that with all the simplicity that entails and the speed and the decision making that's kind of more in your control? Who would, if they had that, who would go to that first? That'd be interesting, because that's our aim. We want to help people build their own investor network, whereby you have a sufficient number of investors where when you have a new project that comes out, you put it to your investors first, and there'll be someone in your group who is in the right position, right time to take that offer up
Yeah.
And that's what we're looking to do. If that's Ray, just thinking about it, if people are interested in that, we'd love to know. We'd love to know. So drop us a line, as Ray says, hello@htrmoney.co.uk, and just let us know if you're interested in cultivating your own book, little black book of investors who you can, attract, grow, and have on tap for your next money raising venture. That'd be interesting. Love to know that.
Okay. All right. And on that bombshell, let's find out. It'd be good to get the feedback. We'll have to do a repeat exercise on this once we've had a bit of feedback and some comments in. If you're listening to this, leave a review. Let us know. Just go in there, leave a quick review, a couple of words in there. Whether you like it or not, let us know. And, and that
Please,
always helps.
I was going to say, so long as it's not things like get lost or please stop.
Please stop. Yeah. Good. All right. I've been Ray McLennan.
I'm still Nigel T. Best. We'll see you soon, folks.
Bye.
Thank you for listening to the How to Raise Money podcast. It's made for people who want to raise money as debt or investment equity for their business or property proposal or empire. See you next time, where we can show you how to raise money. There is abundance. There is money enough for everyone on the planet. The question is, who has yours?